Okay, in line with street expectations, the Reserve Bank of India today cut interest rates for the third time this year, taking a cue from the declining inflation trend. The central bank has cut the repo rate by a quarter percentage point to 7.25%. Previous two rate cuts in March and January this year were also by 25 basis points. Despite mixed economic signals with regard to industrial output, monsoons and the US Fed's upcoming forward guidance, the RBI said that a more appropriate stance would be to revive investment through a front-loaded rate cut right now and then wait for data to clarify the uncertain macroeconomic pointers. Let's listen into what the governor had to say.
We've done what we could given the room that current data allows. In fact, we've sort of erred a little bit on focusing on encouraging investment given the need to alleviate medium-term supply constraints. Now, going forward, if more rooms builds up, we will have more room to take action. I think the point we've always made is that we have to be on the disinflationary path that has been set out. So whatever room builds up on the disinflationary path, we will use. But we're not going to move far away from the disinflationary path. That wouldn't make sense given that we've just building up credibility to stay on that path.
Okay, so the RBI has moved from a stance of monetary tightening to a cycle of easing this year. And with this latest 25 basis point reduction in the repo rate, the hope is that banks will extend this cut to housing loans in the coming months. However, despite the fact that the previous two rate cuts, the residential market is yet to pick up. Let's get a perspective from Mr. Rajiv Talwar, Group Executive Director, DLF, joining us on the phone line right now. Mr. Talwar, thank you for joining us. Your first reactions to the rate cut today, is it finally going to inject some energy back into the sector? Do you see demand picking up now?
Yeah, I think it's a very, very good step. Of course, the market expected a little more, but that's perfectly fine. I think the RBI is a cautious institution, and they've first seen that the government side, they've done 3 rate cuts, expect the banks to pass it on, and as soon as rates come down to about 9.5% by the banks, I think we'll see RBI taking the next few steps. So in all, a positive thing for the real estate sector. You just hope that, yes, with the confidence building up in the buyers, hopefully this should now translate into more sales all over India.
Mr. Talwar, what do you make of the RBI stance today? Their tone is still very cautious despite 3 successive consecutive rate cuts. Their tone is still cautious in terms of how they see, how they project growth. The government may be talking about a GDP of 7.6% according to the new calculation method, but on ground we know that the signs are not positive. Do you think the RBI has factored that in, and going forward, what is the likelihood of RBI continuing this stance?
I think the RBI has played it very well over the past 4 to 6 months. They've begun at the beginning of this year to do the rate cuts. They've seen that the government gets into action. Now, I think for the banks to get into action, and banks have just had a 0.15% cut, but they're hoping that, yes, should it be further translated into another 0.5%, that would be a great thing for inventories to dilute and to be sold, plus new launches to be made. So in all, I think RBI playing a cautious game, but forcing the other institutions to act also rather than just by itself.
All right, Mr. Rajiv Talwar there giving his take on what to make of today's rate cut from the RBI. Mr. Talwar, thank you so much for joining us.